If you own a property and you want to, let's say, turn your owner's occupied property into an investment property, then this video is for you. Whenever you pay down your loan, you have two options, right? You either go with the dumb money and you pay down your loan as fast as possible and you put all your money into your mortgage account, which puts you into a trap, which I'll talk about later on. Or you go with the smart money and instead of putting all your money into your mortgage, you put it into something called an offset account. Now, offset and redraw, very fancy terms. But what do they actually mean? Now, you would be surprised by how many people who actually don't know the difference, and it could cost you tens of thousands of dollars. Now, first of all, one similarity, they both reduce how much interest you actually pay on your home loan. But the way they do it and how flexible they are is where the big difference lies. An offset account is like a normal everyday bank account, but it's linked to your mortgage. Now, your loan balance remains the same. The offset account is only there for offsetting purposes. So every dollar you keep in there reduces or offsets your loan balance, so you pay less interest. Now, for example, you have 20K in your offset account, you're only charged interest based on the loan minus the offset account balance being that $20,000. Therefore, easier access, daily interest savings, and no redraw needed. And those are the benefits with an offset account. A redraw, on the other hand, is not a bank account. A redraw is money you've already paid above your required repayments. It sits in your loan account, reduces your loan balance, and therefore reduces your interest. But if you want to use that amount that you overpaid, again, you have to request a redraw. And some banks have limits, delays, or even fees for that. Therefore, it is not as flexible, it is not always instant, and it can be restricting. And those are the main drawbacks. However, redraw loans often come with a slightly lower interest rates compared to the loans with offset accounts. The difference is usually 0.1 to 0.3% lower on redraw loans. However, that small saving, can cost you thousands in flexibility and tax benefits, especially if you plan to invest again in the future. Therefore, if you're laser focused on lower interest rates and don't need flexibility, redraw might be okay. But if you're building a long-term portfolio and you're serious, offset is probably more worth despite the high interest rates.